plus that negative 14k. I was right about What's up guys, Steven Dux here. Welcome to my new video lessons of the week, and today I'm going to talk about some trades that I made last week, some trades I made today, and the thought process for tomorrow's watch. So the major trades I'm going to talk about will be ABIL and AWX. On ABIL, I think I made around 40,000. On AWX, I made around 51,000. So last week my profit was right around 100,000. Those are considered to be really big profits for me, and every time when I make a big trade, my ego gets too big, then I start over trading. I think on Monday I lost about 14,000, and I quickly realized I made mistakes and I stopped over trading, and today I made some decent profit on CBSI. So let's get into the thought process for ABIL and AWX. So on ABIL, I think I shorted right around 770, and I covered into 520. I think it was right around 520, made about 28%. And I see this momentum shift right around this $8-ish, and when stock trades that many times and it only has around 1 million flow, the flow becomes insufficient. When it drops, it doesn't take that many shares to drop. So this is I think I talked about this in the last video, and let's not go over that much. So the day before yesterday, I was shorting ABIL in the I think it was in the 7s when this major momentum shifted, and into this afternoon perk I feel a little bit dangerous because it might be turning out into a next BLNK, so I don't want to risk too much and cut my losses. And then massive dump into the close. In the next day, I had the offering and I missed the opportunity. I should have hold overnight. I had, I think, 8,000 shares, and I missed this incredible opportunities yesterday. So that was a bad trade. I think I took a decent loss August 13th. I think I shorted in the open because I saw there's a massive resistance at 770, and I think 680 is not very far from 770, and I want to use this pre-market high as my risk. So it turns out it broke this pre-market high and went all the way to 825, and it didn't broke the past couple of days resistance, but I tested twice. So I took a loss in this breakout, and I reshorted in the 7 when this massive momentum shifted, covered into 720 again because it looks like it's gonna perk again, and took out this 720 like nothing. So I was scared, started over trading, and covered into strength, took a loss, then it dumped. I don't want to reshort it again because I want to stop over trading. The next day it dumped entirely to where they began at 440. So didn't take the profits, took my loss, and I overtraded, and that is my fault. I didn't really think about the entry. I was too focused on the pattern, because if you have a bad entry and the stock goes against you, even if it's in the pattern, you are down. If you are down 15-20% of your position, you are too nervous, and you will start getting emotional. Once you start getting emotional, you start overtrading. So there's two factors that is really important in trading. First, you have to focus on the pattern, what pattern you're trading, because some patterns have specific winning percentage. Now, the second is your entry, is your risk management perfect? If it's not perfect, pattern can easily shake you out. If it shakes you out, you want to make your money back. If you don't make your money back, you start making stupid decisions again. So that is the key factor to avoid, and I do know a lot of my students, a lot of people are making those mistakes. So please be careful. When you have a really good odds pattern, you have to get your entry right, get your risk management right, because if you don't have both of those things at the same time, you will lose money. So that is my start process for ABIL day before yesterday, and on this month plus that negative 14k, I was right around plus 70k, 80k-ish, and I will take my decent profit. Next time I'll be more focused on my entry instead of patterns, because I focus on pattern too much. And that's where you start to take your big losses right after a big gain. So it's my mistakes, and I hope you guys learn from my mistakes. And let's get into today's OTC patterns. So CVSI went from 20, I think it was right around beginning, it was on 40 cents to $5. And yes, it went up a lot, and it's on a huge market cap. So those market cap are typically bigger than the market cap I used to trade. I took a short into the 550, risking the greenish, and dumped all the way to 450. And there's huge buyers again and again. So I cover in the 470-ish. Now OTCs, you don't want to cover in strength, because when you cover, it takes too long to cover. If it takes too long, sometimes you cover 30 cents more where you want to cover. So in this case, once it bounced through that 4.80, because it cracked this 4.80 previously, and if it stock bounced back right through 4.80 like nothing, you have to cover, because 450 becomes a support and 480 becomes another support again. So if you want to reshort into the 490 and $5 again, and there's going to be two support, 480 and 450, and it's going to be really hard to crack. So that's why I cover in the 470 right around right before goes over that 4.8 resistance. So that is a really important lesson. If the market cap is too big, like 500 million, then you have to cover. And there's actually a fundamental behind CVSI, because they are marijuana stocks, and marijuana getting legalized, and they start having, I think last quarter was 12.1 million. So that's a really decent amount of earning. So typically on those OTC stock look like a pump chart if they do have a fundamental, and if they have a large cap, just make sure take your profits really quickly, because they don't drop that quick. They're not pump and dump, and they hold their dips really well. So that's one thing you need to be careful of. And that will be it for today. Thank you very much, and you guys have a great day.